Good afternoon, guys. Welcome back. Alrighty. So, the only thing that remained truly green today was the NASDAQ. Everything else was basically just break even, waiting for tomorrow's CPI numbers. We did see sort of the dynamic of what we've been talking about of the shift from bonds into more equities and using, again, the two different sides of the equation of value and growth to hedge one another. So we did see as tech sort of rose through today. We saw things like banks take a little bit off going into CPIs tomorrow. This is again due to just that relationship between the two. When we look again at the Nasdaq here, climbing back up to the high, whereas S&P is already at the high. We've talked plenty about energy. Crude passed $70 this morning for a barrel, and again, this continues, and it's not stopping. Right? It was the dynamic of today being a very slow day, really, going into tomorrow, which was to be expected. Here, banks, you can really see sort of the dynamics between the two. This is not to say that this is the stop of a trend, right? This is going into CPI numbers that directly affects these once again, and so it makes sense for caution and for this waiting sort of feel. Now, when we talk about what's coming for tomorrow, it's important to again state that no matter what the numbers are, and even if they come in hotter than expected, which has been the trend, right? That should be expected. The Fed's not going to do anything. The Fed's just not going to do anything. And so this is, again, the waiting game of, okay, when will the Fed say they're going to talk about it, right? I don't know. No idea. Excuse me. Oh, I had to sneeze. When it comes to the possibilities that we could see some price action that reacts sort of in a volatile way due to numbers, let's say, being different than expected, sort of the other direction, sort of how we saw bonds get sort of yields go to basically the lowest point we've seen them. What would it take for the shift for basically money to come out of the equity market and go back to the bond market, or for the more volatile tickers to slow down, like when retail exits? Some of these things, there's not really a pressure for that. And so it's really just a pressure to the upside of how much do we want to risk on during something that we don't understand yet. And again, that question is so far away that we just continue to buy shit, right? And so today's a good example. If we look through tickers that did well today, it was risky. It was risky sort of trades, right? You have basically a growth centric day. If you look overall, it was healthcare that did the best. Again, I say healthcare because it was bios, it was pharmaceuticals, it was insurance, all of them basically to gather in a lot of different ways. And that was really the only thing that we can consider sort of let's say, a sector that performed very well today. This is a continuation from what we've seen. What we did see was, I talked about the X position, obviously CLF here as well with steel. Those things that are tracking commodities did well today. The the consensus is, again, that with inflation, commodities are going to do well, and they're in a super cycle anyways. So we saw some big moves. CLF with a really big day, 14.5% here. We saw this earlier in the day as well. X doing very well as it broke out of its sort of local range, heading back up to a high. This has just been a nice trend. We talked about the entries coming back in here. We kind of took some time off waiting for China to possibly spruce things up, but they didn't. And so this trade has been very nice, and it makes a lot of sense for what we're doing. And so when we look for those trades that are a little bit more volatile and allow us to swing and be a little bit quicker, we've talked a lot about this X trade, for instance, right? And so even though a lot of the bios are a little too difficult to get into, this has been a consistent trade, and consistency is obviously key in the market right now. The rest, again, we're looking at a lot of bios are here. The interesting side of things was sort of this dynamic with Snap, Twitter, in relation to Facebook's move, right? Facebook taking profit from sort of this high. Again, it's been trading through all-time high for quite a while. So we're seeing some sort of, I don't know, interesting back and forth trading going on there. I think it's showing this relationship I've talked about, whereas retail is going to exit those, whatever we want to call them, meme stocks trades. That money is going to find a new place, which is most likely its counterpart, which is the mega caps, right? Whatever the mega cap, Whichever mega cap is more in relation to that trade that those retail traders made, the money's probably going to find its way here. And we've seen this sort of back and forth continue. And so it's, again, a slow day. There's not much to see. It's going to be, I would say, either really exciting last 2 days this week, or it's going to be more confirmation that we got to really wait, right? And if there's a lot of waiting, this is where our positions that are set up to basically last, right? That's where we just look at the entire market and we go, okay, this is going to trend. Let's just stay in our position, right? Stay in this position, stay in energy, stay in banks. Look for those positions that we can try to take some swing trades on, right? So there's the travel side, which has short-term volatility. That's value. We have that. We have the new sort of healthcare dynamic, and that's it, right? And so we have to continue to keep our eyes open because when we're at a low volatile sort of situation, we want to try to find trades that are going to have higher volatility. And it's important that we keep our eyes open. So I posted so many tickers on the list, is that we need to be aware of the possibility that a lot of volatility could come in the market when there is zero being priced, right? We had a 5% gain on spot VIX today. Yeah, that's less than 18. It hasn't moved, right? Hasn't budged. That was basically directly linked to the S&P coming down, right? This is an important thing to keep in mind. It's important to realize that things are just, they are the way they seem, which is no volatility, just nonstop sort of bullish price action. We need to be aware that obviously the more risks we take, the more risk we're taking on of a downside move when things do sort of get going. It could be one way or the other, right? And that's why I'd rather still prefer to take these slower long positions. I know nothing's probably most, you guys are probably in a very slow moving position that's not really been doing anything. We saw a lot of action in the last 2 days, of course, but in terms of the overall, the average is probably not much. Well, we're trying to find things where we can, but those are the ones that are going to last. And this is where, again, no matter what happens, the market's going to go up. It's just a question of how do we get these trades to be able to get the money home and then get back into them, right? We don't know yet. And so we need to be patient, passive, stay in the positions that we have. It's a little too risky to switch up the strategy and go try to, again, you're never going to catch everything that we see here. You see some things that, again, they're so day to day that you're never going to get the timing, and that's half the problem. And that's why half of these trades or charts I look at, I'm like, there's not a trade here, and that's really the question that it should always be, is there a trade here, right? You should always look at the charts through a lens of trading. STC, for instance, was a trade because there was a trade there. There's an opportunity to take a trade. Most of these other charts, they don't offer that. It's some sort of retail push, and then it's a question of, does volatility hold up here? Usually no. And we saw things like AMC today, right, come down out of this tightening. It's taking, again, the volatility to its maximum, trying to push it further and further. At some point, it can't continue. It's the reason why we talk about these trades are only basically day trades. You can't really keep pushing them. Now, whether or not this breaks down or not, I mean, in terms of what we look at in patterns and trend lines, this trend line broke here, right? We didn't get the continuation out of this tightening. And so, you can start to beg the question, okay, after hours is down a little bit, what's going to happen here? It's so outside of the rest of the market that these are just coin flips, right? And that's why it's day to day. And yeah, we'll see. Yeah, it's been fun. We'll see if the apes are able to continue or not. I don't expect it to affect the rest of us, though. I'm going to take a look at GME here. I know they got earnings going on. Let's see what they got. Down on earnings. Oofa. I don't know if the earnings actually came out yet. I don't really care too much. The candle today was an inside, so also with the upper shadow of the day before, not the greatest looking chart. And when you kind of compare where exactly you are, you're not great, right? You're not great, and you don't have the sort of sustaining power that you had before of holding levels due to, again, everyone's buying everything. It's not just one this time. So we'll see how meme stocks do tomorrow. They're basically off my radar now, other than for the fun of it, entertainment. I don't really think there's anything else you can do. Contracts are getting maxed out on the volatility side going into next week's monthly expiration, which again should present more sort of swings back and forth that are just there's nothing you can do about them. You're just gonna get hit by something, up or down, and that's not very fun. In terms of again the numbers, I'm gonna post basically the numbers in the morning of what I expect for CPIs. Also to mention again, ECB news is tomorrow. If you saw, Europe was actually closed all-time high. If you look at something like the stocks 600 Europe, that actually closed all-time high today. And so it's very much in relation to our chart. They are very value heavy compared to China again, which is tech. And so seeing that side actually continue to do well going into their own news, I think there's some agreement already that ECB is going full federal, U.S. Federal Reserve mode. And so it is nice to have every single market continuing, especially when we know this is basically the only thing people want to buy. Now, the stock market in Europe is basically, I mean, compared to the U.S. equity market is kind of, I don't know, silly. It's just there's not much, there's no volume, right? But it matters because there's a relationship there that Europe should technically just be, it should just be bigger, have more, right? There's more history. There's longer term companies. There's a bedrock there that's completely different between cultures and relationships between countries. You would think that there should be some sort of growth beyond ours. Again, what we have is our companies themselves, which dictate everything. You would expect a little bit more. It is nice to see them pick up and continue through the high. It is something that I think in the future will change. But as of right now, we're just seeing it climb with us, which is better than hindering us, right? If you remember back when we had some volatility back in this area, right? A lot of this was due to Europe would just open lower because they were having problems with COVID again. We were never pricing COVID, right? In sort of like our market, we weren't going, oh, more people died, go lower. But Europe was, because Europe is a lot more people, sort of, they care about people a little bit more, right? But it's more, the stocks are tied to the economy and the people compared to ours, right? And so we don't really have to worry about that anymore, which is something that maybe some of you have noticed. I've been thinking about it. We haven't really had to worry about what happens in other countries for pre-market action in a while. I started to bring up China a little bit through here because it's been bearish, but it hasn't really affected us at all. There's almost nothing that matters besides our own sort of issue, and that's because it's the only thing in the world that matters, is what the Federal Reserve does with its interest rates and asset buying, and what happens with inflation, because that's it. There is nothing else that matters, and everyone else is just kind of on for the ride. I think that's something important to think about, which is sort of half the story of why we've talked about you got to just be in a position. Best day to enter was yesterday, capture day to day, because there's really nothing on the menu anywhere else in the world that can sort of derail the trend that we're on, right? What is going to stop our energy market or our bank market from heading to the upside? Not another country. And so it's going to probably be up in the morning. 9 times out of 10, it's been up in the morning, right? That's an important factor to continue to push risk on, even though there's really no risk there. It's just how things work. It's a trend. It's how things work. There's going to be more buyers. I mean, at the end of the day, no matter what happens with this story in a year from now, there's money to be made right now, so we continue, right? For charts, I'm not really sure. I don't want to oversaturate things a little bit too much. I posted big lists. What I'll do is I'll just focus on getting the trend lines out there. Make sure we have some good looks, and maybe look for some things that are a little bit interesting going. I am a little dry on risk. I feel like I don't know. I feel it's not so much a factor of not being as active, but I do feel like there's more risks to be taken. And so I'm gonna do some. I've already done enough looking at every single ticker in the market and everything going for tomorrow and everything. But I think what I'm gonna do is do some options, hunting, look through some chains and try to find something that we can find uh, a whether we want to call it yeah, you find alpha, but we find something that's a little bit different than everything else and doesn't have the same premise, right? And then I know the players are a little different. It's not a trade it's not, we don't call it a retail trade where they're buying meme stocks, and we don't call it a trade that's based on this inflationary sort of thing. Maybe something that's directly linked in the rules of just options, right? I don't care about the underlying chart. I don't care about the name, don't care about the sector, and try to find something that's literally just based on these options look like they're at a low price, right? And we can use the understanding of volatility right now of being basically zero. There is no volatility in the market, and use that with an understanding that volatility should go up. Now, volatility should always go up in the future, which is just a given. And that's why obviously the longer term you go, there's going to be more volatility involved, which is why your premium level's higher. But maybe find something on the short term that should be due for some sort of move. This is going to be in relation with the June monthlies expiring, which I think is going to be a bigger deal than people are thinking right now. I think we forget how many calls were probably just created over the last 2 weeks due to the retail traders coming in, buying a bunch of meme stocks. That's a new level of quantity that we have not seen since January, really peaking in March. And so I think we're going to actually have a ton of options out there that are going to be going into expiration. And with the market trading flat right now, a lot of those are just being left off the hook, right? None of them really need to be hedged right now because the market's been going up to all-time high, but it has not sort of rallied out of here or taking a drop. So it's been so stable that there hasn't been a volatility or a need to sort of hedge hedge options in that way that we've talked about in the past, where when we have these sort of big moves, they're very much gamma related, right? The sharpness. We haven't done that. We've been very trendy. So I think going into expiration, it's going to be pretty hot. And so looking for some trades that are based on that, I think will pay off in terms of alpha. It's not, it's entirely still a trade that's based off of just keeping your eyes open and looking at as many things as possible and watching options. Those are your interests in something like that. I would say go pick out, 10 different options, like the direct contract, and throw it into your watch list, like on your broker. So, for instance, I think I've showed it before on Interactive Brokers. I will take the actual contract, put it into the watch list, and watch how those prices move. Those, those ideas of just watching the contract and forgetting about the rest of the nature of it might be a good way to just sort of spiral up some new ideas and sort of find new ways to get active. And that's sort of the risk I want. It's not like the risk of like, let me go buy something that's literally worthless. Maybe someone will buy it. That's not what I want. I want something that's actually dynamic on the option side that is directly going to influence the underlying, right? With the gamma move. So going to be looking for some things around that nature, a little bit more derivative heavy. So I'll see if we find something in. I think it's just important to realize when you're in a moment that's so stable and nothing's really happening, right? It feels boring in some sort of ways, even though I think this whole dynamic's so interesting. But there's not much you can't bite off more than you can chew here, and there's nothing you can do that's sort of what I would call alpha, because everyone is quite literally doing the same thing, and we have to wait. We're waiting, right? It's not like watching paint dry. It's like being in a room with 100 people and you're all just standing there wondering what the hell you're doing in the room. That's kind of what it is. And so we're waiting. Let's find some things to do and get active, right? And so maybe we'll start to be a little bit more back to the boogeyman front, because when everything feels pretty, let's just call it simple and not very volatile, and there's not many risks involved, maybe this is the time to turn it on and just start getting a little risky, right? And I don't mean retail stocks, right? So I'm going to bring some of that the next 2 days. Would love a nice weekend trade to to make 100% on, because we haven't done it in a long time, and there really isn't anything out there. So that's why, if we haven't seen it so far, then it's time to fucking look, right? Haven't looked hard enough, obviously. Been a little lazy with that. So I will see you guys in the morning. Enjoy your afternoon, evening, wherever you are. Remember, don't buy Bitcoin just because another country is going to turn into a currency. Just wait, right? You can wait a day, right? Find out. And don't buy AMC or some shit like that, or GME, because you a Reddit thread. So I'll see you guys in the morning. And until then, enjoy.